Hello and welcome to this week's Trading Safely Inner Circle. Payroll yesterday gave you the levels ahead of it yesterday in the daily update, and gold was the one that was probably closest to something significant. Talked about this weekly level, this black line here, for some time now. We stopped just ahead of it, and we rallied sharply on the first sign of weakness on the Dow index. And by the end of the day on gold, we've had a pop signal, which is that blue arrow, and then we've got an extremely rare blue square, little blue square. You can go years on a contract without actually seeing one of them. So it is a stochastic based pattern, very, very rare. Means that this level at 1262 is a bear trap because it's just a few ticks below Friday's low. But if the dollar, which also failed to break up, continues to retrace down, then gold can go on at least a bit of a counter trend bounce. Just going to highlight the connection about how much gold moved in relationship to the dollar. So this is where the dollar started to give back its gains after payroll. There's the spike there. We went back below the key 77 point, but if we then connect that with gold, we made new lows as it broke down, or didn't quite make new lows, and then rallied very, very sharply on the first sign of the dollar breaking down. So just an idea of the connection with markets. If I was to do treasury bonds, they made their low, surprise, surprise, at the same time. So important to remember, especially with payroll, the first reaction isn't always the right one. The number was mixed. The headline number was extremely poor. The market seemed to focus on stronger hourly earnings, which doesn't really matter to me. Switching to the dollar index, we've failed to make that close above that weekly level, and we've had a UFO signal at resistance. So this connects up with the gold. We need to make new closing highs above Friday's high in order to mean that that signal is false. Moving back to the intraday chart, the levels on the dollar index are spread out, and the major half-day level is still all the way down here. So we need some confidence to occur to make the supports a little bit stronger. Onto the euro dollar, never reached the 116.17 point, which remains very, very important. No bullish signal for the euro dollar, which tends to move inversely obviously to the dollar index. Aussie dollar closed just below that monthly level, which means it is still on a negative track, but it wasn't particularly convincing. Continuing currencies, dollar yen posted a UFO, this blue arrow, but not at resistance. So at this stage, it's simply a warning. If I then go to the intraday chart, so let's just type that in. We had a failure at that final half-day resistance, reversed all the way back down. What we're really interested in for Monday is we start holding below this level here, which will give it some space to drop another 80 or 90 points once down to 111.65. Oil was a real casualty on Friday. I actually read some stories about oil, and you would have been forgiven that all the stories on Friday were actually bullish, so that just shows what use that is. We actually closed below the third range deviation pivot down, so the focus early in the week is 48.41 down to 48.18. We know that we've already failed at a resistance after what was a false break up, so under pressure in the short term. Moving on to indexes, I sort of said ahead of payroll that it's extremely unusual for any of the indexes in America to ever have a down day on payroll, and of course, lo and behold, they do, if only a minor one. We've had a time continuation, but it's a very weak signal, and as it's not at resistance, it's just a warning sign, no more than that. If I go to the Dow futures, I have exactly the same pattern, but it's a very weak pattern. And if I do the Dow itself, it didn't occur, and the Dow was pretty much unchanged, but did close on its highs, so didn't really want to go down, did it? If we do the Nasdaq again retraced slightly early on, never went to the breakout point, stopped well ahead of that, and again was slightly up on the day. Finally, the Russell, we had another stepping process end, a 240 minute, but nothing moving to the top. Just going to do the DAX. DAX got above that monthly level. We've had a time continuation and UFO, but it's going right into major support. So 12,935 is the breakout point, the low was 31. So we really need to have a close below that monthly level and some sort of expansion of range before we start thinking real negative thoughts. Same pretty much for the Euro Stocks. Hasn't quite taken out those negative highs, but was actually a very, very quiet session. It's got to take and break that nearest daily support of 35.66 before we sort of entertain any negativity. Here's the FTSE. Had a breakthrough a weekly level, then we had bullwhip buy signals, and then pound down, FTSE up. So this is very much a currency related move. We've come all the way back to that monthly level. So it feels as though the pound is going to dictate what the FTSE does to a certain extent. So we'll see in the coming week. Just going to go through the short-term levels on indexes. I haven't looked at them since late yesterday afternoon, and the reason I wanted to look at them is actually exactly this. Just wanted to see whether the highs that were made yesterday created a resistance point, if only in the short term, and this is the E-mini, so a level that was at 25.09 has moved to the top of the trend, so that makes this high pretty important. Also, the supports are not strong ones because they're lower time frame levels, and we have a bit of an area between 25.29 to 26. Let's do the Nasdaq. Not surprisingly, as we were so close to the highs, the level has not moved up, so 6,015 is the critical point. We'll do the Dow future. Wow, looks like there's still nothing above, and the major supports over 300 points lower, so a great deal lower there, so nothing's moved up. Quickly do the Dow. I assume it's going to say a similar thing. Because we're so close to the highs, then none of the levels can move to the top. We need some sort of movement back the other way. We'll just do the Russell, which had been the leader, and this one is getting much more interesting. And the reason for that is we are so condensed, so everything has caught up. Various times where the market rallies and we step up and nothing moves up, and then suddenly we're very much in a very tight framework. So 1,504, 1,517 daily close either way dictates whether we go again. Russell had been the leader. It appears that the Nasdaq's now getting back into favour. Earnings season coming up. The big stocks typically get ramped ahead of earnings. Moving on to stocks, our position count is pretty light at the moment. VSTM is something we've been long all the way from back here in July, ambling sideways, not really doing very much, waiting for some news. McDonald's gapped higher about a week or so ago, no apparent reason, moving up with the market, but still hasn't taken out that weekly resistance. ICF, short this REIT ETF, has booked some profits down at this daily level the week before. Not really a great deal going on. Stop was lower during the week. Now if we close above 102.50, that was the original sell signal at monthly resistance, bear cage, UFO, time continuation. Finally, the jewel in the crown, SPPI, long from back here, did have a UFO and time continuation. All the hype has sort of come out of it, the chat room hype, so not surprising that it's retraced somewhat. Support is still distant, so keeping an eye on that, maybe thinking about taking some more profits. For that, we move down to the short-term charts. If we close below 14.15, that will be a reason to take some more profits on the table, off the table. Still willing to add and get back long again if we get some major signals. Last but not least, bond markets pretty much went to 3 down after payroll, ahead of that daily support, reverse back. We've closed back above 152.01, which means that it's a false breakdown for now. If we move on to the 10-year notes, it did reach the extreme for the day, just a couple of ticks below on the 10-year. Just check the 5-year whether it did the same. Yes, it did, but has not closed above that weekly level. So 117.12 and a half, pretty important early on, but we need new closing lows to actually restart the trend here. Okay, I think that's about it.